Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Thursday, and we're at the 14th of March already. Wow, halfway through this month, 2024, just after 6:10 p.m. Central Time. So, hot PPI, hot CPI numbers. Now, that's what the Fed has to look at going into next week's FOMC meeting. What do you think they're going to do with that? It won't take very much, a member or two, to swing around. Are we going to go from 3 rate cuts to 2? I mean, some people are saying, oh, it can go the other way. I don't see that, all right? I see, if anything, the Fed, the question is, does it stay 3, go down to 1? Where is this going to be? Because so far, the data should not move the needle on the Fed making any moves. But we won't know that till we see the dot plot. You remember that. The dot plot's going to be at 1 o'clock, what the market really focuses on. After that, it's the fluff of whatever Fed Chair Powell says, but I think all eyes will be on the dot plot. Now, tomorrow morning, we have Triple Witching Day. You know what that is? Options, futures, stock options. There's all kinds of things that start expiring tomorrow. Volatility's normally okay until you get to the latter part of the day. And then it really gets picking up just before the option expirations. Okay, futures, the March futures go off the board tomorrow, so remember that too. We get the Fed Empire State Manufacturing Survey for March. We get at 7:30 also the import-export price data. 8:15, we get the monthly industrial production and capacity utilization. That'll be a report that everybody looks at. University of Michigan, the prelim March consumer sentiment. That's also one that gets a lot of attention. So we'll see just where everybody feels about the marketplace. Now, when we look at where we're at tonight, I don't know if you were watching the markets, but they had a late day rally where they cut the losses of the market down rather dramatically. I went back today and I was looking because I heard it was Josh Brown yesterday. I was trying to remember who said it on CNBC. And he had mentioned that we had gone in, I think the S&P, 265 days as of yesterday without a 2% correction. So we were using some artificial intelligence today and looking it up. And we found it was 1.69%, to be specific. That's been the biggest break we've had in that period of time. Isn't that amazing? I mean, to me, it's shocking. The metals, that's what we're really talking about here. And gold has to hold this area and start picking up if it's not going to lose its embedded reading. It still had it when I was opening this tonight. Remember, you should be moving to the June currencies at this time. So when we look at the metal market, gold is down 0.92% going into Friday trade now, $20 lower. When we look at the April gold, you can see how the market has come down. You can almost see a trend line right here. Now, if it breaks through this to the upside, that's where you start the rally again. So this is important. Some people might call this a flag. Some of us will call it a pennant. There's many ways you can look at this, but any way you look at it, you can almost see the trend line that is formed there, and the question is, can it get back over that? And one of the numbers that would do it in my work would be 2185.60. And admittedly, that's $20 higher than this, but that's what you need. Where's the market finding support? Well, if it breaks through there, the potential could be back to an 18-day average of closes, 2113 right now. What the market did is it was running day after day, 6 days in a row over the upper Bollinger Band. It pulled back, and now you're in that consolidation phase, and this is what I'm talking about. Right now, both numbers are still over 80. A close under 79 would certainly get me to the point where maybe it's time to be out of long positions, and a move back over 2185.60 could be an area where maybe you're saying, I got to jump in. This market might be headed to the 2235 area. I think tomorrow's a real important day. When we look at the gold-silver ratio, you can see I've got it in silver and that in the color silver. And it's because this market double-topped against the 90-80 zone, 90.8 ounces. You're back to 86.5 ounces of silver you need. And you can see silver had done something very interesting. If we step back together, you had an outside day to the up. Let me take that back. Here's your outside day down. This is what I was trying to bring you to. And when you took that out, you went right where you should. In my outside day course, I teach that when you take out an outside day downs high, within X period of time, the market typically goes to the closest Bollinger Band or moving average unless it reverses course on you again. In this case, it went right where it should, gave you a little bit of an extra bounce there. But notice how it's not even flirting with losing its embedded reading. So technically speaking, this is stronger than the gold market right now. The copper market's got 2 days over the upper Bollinger Band. Is it going to do that word embedding? You cannot count today because you don't know where it's going to finish on Friday. Both numbers were over 80, both the day before, but you watch, not the day before, which is Tuesday. Tomorrow's the key day for this. Markets typically don't embed. So the odds favor the copper, the odds, and that's all it is, will try to get back within the band. It still can embed, but try to get back within the band. In the platinum, I have explained to you day after day that the first challenge typically of 200-day average in gray in a Bollinger Band is often a resistance point. In fact, often it's the green line in that. In this case, you had another line over it. Now what could be the support, and that's what you've got to look for, is the 100-day average in green going to act as the support. It certainly won't if you take out that low that you see right over here, but barring that, this is where the market's fighting for its battle. And in the June dollar index, short covering rally, hasn't proven anything. When we were rallying just the other day, I said, if this market wants to rally, the combination of the 18-day and the 100 could offer the support. The resistance is the right word for the bears to be looking at that market. Now you're coming into focus in that. So I think tomorrow is going to be an important day in this market as well. Excuse me there. You put it all together, and we try to come up with things that can help you. And as a trader, let me bring this up the right way. I'm sorry about that. Lewis, can you give that a click? I can't see it on this one. Okay, there we are. And what I'm talking about here is our futures trading kit. Sorry about that. Have help here today. We installed some new software in our computer, and it works a little different. To make a long story short, this kit gives you many things to get you started with your trading. First of all, you're going to see tools for the beginners, all right? And this is trading rules, chart patterns. You print these out, you put them on your desk, and you see ideas there. Cause and effect. One of the cool things about cause and effect, and I created this many, many years ago, is you look at M1, M2, M3, free courses, free charting courses on pivot points, the Arun indicators also in there. You get the different patterns that you can put in, and they'll show up on your phone if you want. There's many ways you can work with that because it's a PDF. Introduction to futures, Bitcoin facts, the cryptocurrencies, the fundamentals, all this is in there if you're looking to get access to it. So how do you get this? Well, you just go to our website, iraepstein.com, under free offers. It'll be on the top left, or you can click up here. I'm Ira. You have yourself a great day, and I will talk to you all tomorrow.